Republicans reject tax hikes, pushing cuts in their fiscal cliff counteroffer. Markets suffer an outside day yesterday as it runs into resistance. What type of move will this lead to? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with theStreet, and together we bring you Morning Call Express. Markets have been having a nice rally until yesterday's mini reversal. So, Scott, what do you make of the action?
I think yesterday wasn't that much of a surprise. We just weren't sure exactly how we would deal with the 50-day moving average. Yesterday, we walked into the markets, and I think the oscillator was plus 60-ish, which is always a tricky spot to initiate new longs. But guys were trying to stay with existing positions because the markets acted very well. So when you open up at new highs and close at lows, you get a bit of an outside day. That's always a good spot to take some risk off, switch some gears, and see what happens next.
And now going forward, the big question is, what will yesterday's action lead to?
Right, and that's what we're going to measure. And the way I like to measure it is measuring levels and mapping them out. And a good way to do that is with your Fibonacci retracements, because it shows you how to measure the composure moving forward on the type of pullback that we see. So if you go to the chart of the S&P, you will see, first things first, I can show you two different ways to use it. First, the Fibonacci retracement from the highs to the lows. Okay, what we saw is a bounce of almost right back to the 50-day, right into the 0.61% retracement, always a sign to trim some longs and take some profits. And then if you flip it and use it as now a forward-looking tool, you go to a different Fibonacci retracement. You go from the lows, okay, all the way up to the highs, which was yesterday, which was right around here. So this is what you should be writing down. The 25% fib retrace is 1404, which is only 5-6 handles below where we closed yesterday. And then the 0.382 is 1393. If you remember last time we went from the low to this area, we touched down to almost a 0.382 at that point. So I would write down 1404, 1393. If we're going to stay with pent-up momentum to the upside and have any hopes of 1440 or so into the end of the year, these are the two areas that hold. And the first point of reference, also on a micro stance, is yesterday's low of 1408.
Well, let's check the temperature of a couple of sectors. Let's start with the Qs, which had a nice bounce but was rejected by the 50-day. What are you making of the Qs right here?
I think it was nice to see technology participate in the last move, and yesterday you had an outside day as well. You look at the Qs right here, you will see that it couldn't reclaim the 50-day, closed on the lows. I would say as long as it stays above this 65 area, I think it could stay intact. I think Apple is really a nice barometer to watch. You've had a really nice move from 522. We saw commitment to this rally. It got rejected by this 594 area. The question is it going to hold this upper range? So I would watch 582.68. If it can't hold 582.68, chances are it sees the bottom of this upper range, and that comes in around 573, and we should see some more weakness in the market if this upper area doesn't hold.
And what about Facebook, a stock that you have said time and time again is a prime example of why entries and exits matter? Yeah,
well, it was a great target along about a week and a half ago. We were looking around 23.5. Yesterday on the virtual trade floor, I talked about taking some profits. It's not necessarily a short, but then it turned out to be a really nice short. So today you look at the chart of Facebook and you will see here is a nice trade above 24 to where it went to yesterday and reversed. And now if you take a closer look, you will see that it has somewhat of an ascending channel here where you can see continuation, maybe a follow through short below 26.98. I think it sees 26, and then we measure from there. So still a lot of things to do.
And the banks have been taking a little bit of a break. It's important to look at the financials for direction. What do you think of the XLF?
I think they're just kind of in line with the S&P. They're not really leading the market. I think a clue that traders are going to watch is Goldman Sachs. You go to Goldman Sachs and you will see you do have a mini wedge formation right here. So depending on which way this resolves could help us lean which way to go. If Goldman Sachs starts getting above 120.50 and goes to the upside, you should see some help in the banks with this market. If we start breaking below the wedge and close below 117-ish, we should see some more downside action.
And really quickly, metals have been weaker than usual. GLD's been out of play. Avoid for now?
Yeah, I tried being long gold and silver, and then if you remember last week, there was a really potent downside day, a day to take notice, a day that happened in oil a few months back that led to lower prices. You go to the chart real quickly at GLD, here is when it broke out above this area. This is why I was involved right around here, and then I remember pre-market, boom, it sliced it. So at that particular point, I got out of my silver. You haven't seen much of a rally to fill this gap, so I would say be careful here. If gold breaks below 165.38 and doesn't, it's not like a break below and come back above, you could see a retest of this really big trend line, which comes in around 164 on the GLD.
All right, and stay with us for the long version.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.